Hi there, Colin Healey from Premier American Uranium. We're in the process of completing a transaction to acquire a company called Nuclear Fuels, creating one of the most active drillers in all of Wyoming and one of the most interesting and active exploration, uranium exploration companies in the United States.
Colin, welcome to London. You brought the weather with you. It's horrible out there.
It's been changing.
Yeah. Hey, well, with the WNA, World Nuclear Association Symposium, why are you here?
I'm here to see, to keep the pulse on the industry, to meet with investors, peers. This show really attracts such an incredible range of people in the nuclear industry that it's invaluable to me to kind of get the pulse from people that we don't talk to that often, especially upmarket. It's a very interesting and important show for us in terms of information gathering and relationship building.
Yeah. Well, look, I think the tone downstairs seems quite excitable. Everyone I speak to is quite excitable. Not just the miners, but everyone kind of feels like the money's leaning in, the governments are leaning in, and there's like some serious attention once again. It's like a long time coming though, right?
Yeah, I feel like Microsoft joining the WNA was a big headline that really caught people's attention. I mean, their investment in 3 Mile Island Unit 2 to bring that back on really caught my attention when that happened. But I think big tech is just so important, and it's so good to see them starting to get involved at the industry level in terms of kind of, understanding the industry, the participants, and just showing their position to the world. I think these tech companies, I mean, I've said it to you before, they just absolutely want to deliver their products in the most green, emission-free way, and they see nuclear as a solution for safe green power at a large scale with incredible uptime.
Let's not kid ourselves. It's big money we're looking at, not big tech. I don't care where the money comes from, but with the sorts of volumes of capital they have and are able to deploy in a sector like this, can you ever sort of see it sort of cascading, that'd be the wrong word, rolling back up the hill to miners and the like? Because they seem to be very much focused on the sort of downstream at the moment.
Well, I think that's true for sure. But, what I love about big tech being involved here is those deep pockets. They're really driving, SMR development, new nuclear plant construction, new demand specifically for nuclear energy. And I think that definitely translates to increased demand for uranium and eventually benefits uranium explorers and miners. I think it's all connected in an undersupplied market where the deepest pockets on Earth are looking to increase the demand for your commodity. It's a very interesting and exciting time to be involved, and how quickly or slowly those things move, it's a little bit opaque, but I mean, I'm not running into anybody who doesn't think that this is, the most bullish time for uranium that they've seen in their career for the most part.
Okay, we're going to come back to what you're getting out of this symposium in a minute, but shouldn't you be back at home, like getting a transaction over the line?
Yeah, it's that, as I mentioned in the intro, the acquisition of Nuclear Fuels, that we announced definitive agreement back in early June, and this M&A process is complicated, and we're looking to close it by the end of August, and we've had to extend that a little bit for very simple, straightforward reason. We're in the process of they're in the process of updating their technical report on their flagship Kaycee project, and that has to be reviewed and approved by the exchange. So it's just going through that process. It isn't a simple or easy task to quickly update a technical report, but it commonly comes up as a requirement by the exchange. If you have a technical report and you've done some work on a project, then generally people, for the protection of investors, they want to know if that work has changed the scope of the project or anything in the prior tech report. So It's a protective thing, but that's all that we're working on. You saw the results of the shareholder vote from Nuclear Fuels, 95% support. So it's just a matter of time, I believe days, and we'll have that behind us.
Look, and I would say that without sounding too trite, we weren't meant to speak to 3 other companies who were trying to get deals over the line for this week and have not managed to do that. So it takes time.
It does.
It gets done.
It does. It's a
It'll be done
lot
when
of
it's done.
stick handling to
Yeah.
to
A lot of lawyers affecting timelines. That's what I usually see. And again, and I'll probably come back to that in a little bit more detail in a second. The other thing that you're trying to get over the line is obviously
Sebieta.
Sebieta. Sorry,
Yeah, I
okay,
think
yeah.
one of the most interesting pieces of news that we're going to have out this year is our preliminary economic assessment,
Right.
technical report for our Sebieta asset in New Mexico. The nuclear fuels acquisition is specifically about it. Expanding our footprint in Wyoming, turns the company into a 12 project, 5 historic uranium state asset holder.
Right.
But this asset that we bought when we acquired American Future Fuel last year never had a 43101 technical report resource on it. We completed one by the end of that transaction, 23.5 million pounds. We've been working on a PEA that we plan to deliver kind of midsummer. And then we entered into this transaction with nuclear fuels. So another complexity, and the reason that we decided to kind of hold the Sebieta tech report until we close the nuclear fuels transaction is because new tech reports on your projects in your existing portfolio potentially impact the financial requirements and some of the decisions by the exchange. So it is much easier to deliver that after we close the nuclear fuels transaction, even though they're not related. It's logistically and pragmatically just so much easier.
Okay,
So
so-
it's imminent.
It's also imminent, right? Okay, and I'm not really kind of worried about necessarily the detail there. I'm more concerned about the picture we're building here. Okay, so the acquisition, exploration predominantly, but we've kind of got this PEA in process. How do you construct the future entity in whatever shape that's going to look like? To get value attributed to you in the marketplace, because we've seen lots of different models from the big guys right the way down, and varying degrees of success at doing that. So if I look at your portfolio, what exactly are you trying to build?
I think what we're trying to build and what makes sense, and spending many years as an analyst, I'm looking at exactly that. I'm looking at how do you take assets and get more premium valuations for them. And for me, Sebieta was perfect because it had historic resource potential defined through a lot of drilling. We were able to convert that to a current resource. We were able to we're imminently going to produce a PEA for that, all within just over a year's time. And what we've seen, it's a perfect market to discuss kind of why we're taking that route, because when we look at the returns of uranium price is up 4% this year. I think we started the year December 31st, $73. We're at 76. But we've seen uranium equities, especially the neo producers, the near-term producers, and the producers massively outperform the explore and development co's, and that's because they're closer to the cash flow.
Yeah.
And I think that there's a second leg to this cycle where some of the less advanced stage companies really get in the toe. And we've seen that in many historic cycles where the most advanced companies, advanced stage, development stage companies lead the equity rally. And then the development companies are kind of second in line in the toe. And as uranium prices move upward, which I think that they will, I think there's going to be a huge opportunity for the earlier stage development companies to really deliver returns. But what we're trying to do is advance assets to the stage where they get those premium returns. They have visibility on cash flow so that they participate earlier in the cycle. And there's a catch-up trade to be done. As you kind of, in this environment where producers and neo producers are trading at higher multiples, whether it's on a NAV basis, which we can't do until we deliver economics, so that we can say this is the net asset value of that project at this uranium price. Once we do that, we can be valued on a NAV basis and get neo-producer type premiums or approach them. So advancing them through the development stage towards preliminary economics does afford you a potential step change in multiples. So that's the strategy for New Mexico, and the strategy in Wyoming is simple. We're trying to build a portfolio of assets that have exploration potential in the proximity of existing production. So we like nuclear fuels. the Kaycee project because of the drill work that they've done. But we also like its proximity to UEC's Christensen Ranch here at Gary, which is like 20 miles to the east. And then Energy Fuels Nichols Ranch is 20 miles to the east. So it's right in a jurisdiction where, if you had, and that project has a 11 to 30 million pound resource exploration target on it. But if you kind of hit the critical mass of resource through the drill bit, you've got potential off takers or loaded resin buyers, potential processing facilities that could really lower your capex hurdle, leading to production. And similarly with Cyclone, which is down in the Great Divide Basin, the project that we already have, that we've been drilling this summer, and pulled one of our best results in the history of the project, best known result ever on the project, 15.5 feet at 0.09% U308, EU308. And so we're having some good success there, but similarly located within 15 miles of your Energy's Lost Creek production facility. So if we continue to have success there, define or delineate a resource, you start to change the risk for the investor. And as the risk comes down, the multiples go up. So that's what we're trying to do. We're trying to acquire projects that our technical team has identified as having high potential to deliver a resource, establish a resource, and then get the valuation for it.
Okay, you're going to have to break that down a bit because, it's when I was in banking days and we were writing up prospectuses, and I remember a lawyer jokingly saying to me, "Don't worry about the quality, fill the width." Right? He produced a 600-page prospectus for us, obviously with us, and I was going, "This is too much. This is way too much. It's fine. It's what people expect." When you're saying, that we'll get the multiples, are you saying with a portfolio approach that if we're advanced far enough on one of our projects, everyone else gets the same premium? Do you know what I mean? But
no, I see what you're saying. No, that's not what I'm saying.
Okay.
I'm not implying that. I think that multi-asset companies always get valued on the sum of their parts. I don't think the market generally looks at the best asset and applies that multiple to all the assets in the company.
You're not a royalty company.
Despite the fact that I think some companies are presented that way.
Yeah.
But no, I think that individually we're trying to maximize the value of each project. For the Wyoming assets that are pre-resource, that means getting a resource, drilling them out, defining a resource, and getting top tier per pound multiples because of the jurisdiction that we're in. For the Sebieta asset in New Mexico, that means showing the economics of it and saying, here's why we can justify spending another $2-3 million on some metallurgical work, because with a PEA, I can say, here's the sensitivity to recoveries. And we're being conservative here out of the gate, but here's what the value of this project does if we can do some metallurgy, improve this recovery. And a PEA really provides a template for me justifying the money that we're spending.
Right.
But at the end of the day, it also produces a NAV for the project, a net asset value. And NAV multiples will be applied to that project. It won't be obvious because everything's aggregated into your share price. So you don't know what the market's valuing my Sebieta asset at. You don't know what they're valuing Cyclone at. You don't know what they're individually, but I make estimates. That's what the analysts are doing all the time, trying to estimate what the sum of the parts is worth.
But most analysts don't do that. I think that's the problem when in a portfolio environment, right? Because you say, well, that's too much information for me to analyze. I'm going to take some very crude metrics and apply it to groupings here. So what I'm trying to get as an investor is say, I want to buy into the management's thesis behind what value creation looks like. So especially when it's around a portfolio thing, is M&A being rewarded in the market at the moment? Are discoveries being rewarded in the market? Is drilling being rewarded? Is economic studies being rewarded? Or is it boringly all of the above, so we've got to spend a lot of money and do that for all of our projects going forward? What's the smartest company model that I could or should invest into?
Well, the market is rewarding different things in different ways. Clearly, based on the description of the performance of equities, the market has been rewarding those with advanced stage assets, with permits, with licenses,
right,
with facilities. Historically, as the uranium price moves upward, it definitely rewards discovery. Thinking back to Fission and NextGen when they made their discoveries, and they drilled.
Timing's everything as well, right?
It's true, but who was performing better than NextGen in the uranium space when they were making the Arrow discovery. I mean, the market, even though uranium prices went through a terrible time during the delineation of that resource, the market still paid attention because it was such a prolific deposit. So I think the market will pay up for a discovery when it's clearly just globally significant disruptive. But does the market pay up for pounds in Wyoming? I think that they do, and I think that they increasingly will start to pay attention as existing production.
But where do you spend your money, right? You're a company of a certain size. You're doing this acquisition, which is brilliant. I think it's a great thing to do. It gives you some great products, all in close proximity-ish. But you've got so much money that you've got available to you, and you've got to think, what's going to give me the best return of capital invested now? Or do you say, actually, do you know what? It's just a stepping stone, but if I get this done, the next stage will give us it's got fantastic torque, and that's where the step change will be. There's that sort of thinking. I'm trying to buy into your logic and your management discussions.
I think putting resource pounds on the board in Wyoming will make a big difference. Okay. Resource exploration targets are one thing, but actual delineated pounds, even if they're inferred, will start to show someone that it's real, that you're starting to approach critical mass, that it could be a satellite deposit. It really paints a picture of it's definitely there.
Right. And then you have options as to whether you carry on or whether you bring partners in, or
you have all the options
with the portfolio approach.
Yeah. And for secondary projects, you can bring in option E's. There's a lot of different ways to have money spent on your projects, on your non-core projects that isn't your money, and keep some of the benefit for shareholders. So we're always thinking about things like that too. But I think in Wyoming, the strategy of delineating resource pounds will yield for
but what
investors.
About what you said right at the beginning? You go, well, the multiples will change if we can move one of these projects through the economic study phases. So,
and the multiples also change for in situ valuations. When you have nothing, when you have resource exploration targets, it's a huge range, and it's really not pounds. It's really a tons and grade, a minimum tons and a maximum tons, and a minimum grade and a maximum grade, and then you calculate these pounds that we're talking about, and it's all sort of theoretical based on the best information that we have by independent people and so on and so forth. But does the market discount it compared to delineated resource? Massively. So when you talk about exploration, you talk about increasing your in situ per pound valuation. When you talk about NAV, you say multiple, because if your NAV is $1 and you're trading at 50 cents, then you're 0.5 times NAV, it's a multiple. But the per pound in situ valuations also go up with certainty as you move inferred into measured and indicated, and as you increase the deposit's scale and thus its potential, its economic potential,
right?
Or you just increase those valuations. So when I say increase multiples, I'm talking about per pound in Wyoming for the exploration stage stuff, and I'm talking about NAV multiples for the New Mexico stuff
on the PEA.
So any of that de-risking work should improve your valuations,
right?
Whether it be multiple or per pound, and per pound's just a default. That it's very hard to, until you have critical mass where an analyst can say, I can design a mine plan around this, even if they don't have a PEA out, and create my own discounted cash flow valuation model. Then you won't really have a NAV per se.
But so tell me more about the deal and why you do something like that with nuclear energy. You're going, right, we need to do this to stay relevant. One line of thought. We're going to do this because this is a first of many, because we think this makes more. We've seen it done before, but again, timing's everything. When Denison were doing it, when UEC was doing it, it was like, that was definitely to stay relevant without necessarily driving pounds on the ground per se. Is that the right thing to do now? Is that your intent moving forward as a mechanism for driving up scale across a much larger portfolio?
I think with anything that we acquire, we want it to be complementary in jurisdictions that we understand. Nuclear fuels and Kaycee, their flagship project,
absolutely,
was kind of number one in our pipeline. We were extremely interested and curious about it. They were drilling hundreds of thousands of feet in a couple of years, and 400 miles of mapped roll fronts on the property, like just an incredibly prospective asset that we want. We're taking some risk because it's still an exploration stage, but we want to take that risk. We think it has great potential. Its proximity to existing ISR mines, with similar characteristics in the nearby geology, really intrigue us, and we think it's got great potential. So, but we're not just looking to add projects for no reason. We're looking at acquire, explore, develop, which means when we buy something, it's because we want to put money into it.
Okay, so not all pounds are born equal, is what your attitude.
Well, yeah, for sure that's true.
Okay, and neither is the cost of those pounds, for sure. So if this deal's going to conclude soon, and the PEA will conclude soon, which is great. Just looking at sort of stepping back and looking at the broader market as a kind of US company on the TSX, US assets. Do you think you get a premium from that? I'm not seeing it at the moment, but do you think you will get a premium for being a US asset in this kind of environment anytime soon?
It's a tricky question because we have some U.S. neo producers which have extremely strong valuations at the higher end, and that's what.
With not a lot of pounds.
Not necessarily a lot of pounds, or not necessarily a lot of pounds that are part of one large project, because some companies have large pound inventories that aren't part of one project that would become one large mine. If you know what I mean.
Well, let me talk specifics. Okay, I'm looking at UR Energy, John Cash, great guy, conservative guy, but a producer with not a lot of pounds. And he'll probably never have a huge reserve number going forward, but he will continue to produce, hopefully. 650 million market cap. Not necessarily producing a lot of dollars, but he's getting a premium for being this US one of very few, less than like a handful of producers in the US. So do you think that is on a fundamentals basis inevitable for companies that can demonstrate they can get into production soon, or do you think that as a sentiment play, a momentum play, just a consensus play for US operators?
I definitely think in that case, and I like the example because it's only 15 miles to the east of us, and if they need pounds, our goal is to delineate pounds not far from them, and they've made an investment decision to develop their Shirley Basin project, which is 175 road miles away, and they're going to truck it down there.
And they've done it. They're actually producing. A lot of people talking about it, not doing it. They're doing it.
Right, and I toured that plant when it was first built, and that plant worked very well right out of the gate. But they have exploration ground. They over time they'll probably add to those pounds. But it's hard to deny that there's there's definitely an attraction to U.S. Advanced stage U.S. uranium companies, and that's why we think it's worth investing in our assets to move them in that direction. And when does that? When do those valuations start to seep down into the earlier stage stuff? I mean, from what we've seen in the past, probably in the next $5 to $15 move in uranium price, I think you're going to start to see a real supply demand crunch for equities. By what I mean is that, investable uranium names, there aren't that many, and as more money flows into the sector because the uranium price is moving, there's going to be demand for investable instruments like Premier. And I think that all drives, and ETF flows definitely drive the movement of the price too, but that's the exact same thing, right? It's all sentiment. It's people who don't want to do the research on specific companies or like the diversified portfolio that an ETF offers, but it all creates flywheel
effect. That's the sentiment, but it's incumbent on you to kind of do the setup, right? You've got to get to that scale where you can get on an ETF and take benefit from that. It's the setup is on you to maybe help people or be articulate about what you do, because there's massive technical risk downstream, right? We've seen that we won't name names. We've seen a few ISR problem child situations, which hopefully get fixed, but it's not good for the sector to kind of see. Do you take that risk down there, or do you kind of stick up here and say, look, we will partner at the relevant point, we will offload, we will process through someone else at the same. What we're good at is finding stuff, taking it through the economics, and retaining some of the upside further downstream. What is the business I'm investing into?
The business that you're investing into right now is one that is finding assets that have, in our view, great potential to house a resource that would be exploitable in the future.
By you? Maybe?
My belief is that you always move projects forward without putting lipstick on them for sale. The idea is that these are real assets that can be produced from you. They evolve alongside your technical team. It doesn't happen overnight. So there is time and a lot of intelligence in the regions where we operate. New Mexico, one of the largest historic producing regions in the world for uranium. Wyoming, same. So I think you always have to advance these assets as though you're going to move them into production. Yeah. And it's not fake, it's real. And if that attracts the interest of an existing producer, or if you approach them when you have scale, I mean, it makes, in that 8 to 10 million pound range, these kinds of ISR assets make incredible satellite projects. Yeah. If you have an option to process at an existing facility that's set up, the way that ISR works, once the uranium's loaded onto resin, that back end recovery of the plant is not where producers struggle generally. You send them a resin with uranium on it by truck, they put it through the back end of the plant, extremely high recovery, and yellow cake comes out. That's not where the risk is. The risk is in the extraction of the uranium from the ground in the well field, and a little bit in the front end of the plant. But generally, it's the well field and getting the uranium out, and that would still be our risk if we were operating it. But I mean, it just makes sense. Like these plants, these ISR processing plants aren't that complicated. They're fairly modular. They could be expanded. I think we're in a political environment where increases in operating capacity wouldn't be that difficult to achieve. So to me, it would make a lot of sense for several new deposits to be able to report to existing processing facilities. And that's the approach that we're taking at Sebieta in New Mexico. We didn't touch on it, but I think it's going to be a really interesting mining concept, because New Mexico, our Sebieta asset, cannot be a ISR mine because of its position relative to the water table. But we can bring that ore to surface, leach it exactly the way you would leach it in ground, get it into pregnant solution, put it on resin, and truck that resin to, there's 4 to 5, depending on what you count, Wyoming, processing facilities that could take a pregnant resin. There's at least 3 in Texas. So, do you do a conventional mining operation where you are looking at building your own processing facility in the U.S., or do you take it to White Mesa? There's like one option for toll processing in the U.S. right now for conventional ores. But what we're doing with Sebieta is making it possible for that to be processed at a much larger number of facilities. And I think that's going to be what makes that project viable over some of the competition.
Okay, I agree with you, but there are a lot of pigs with lipstick on out there. I know you're not one of them, but at the same time, you've just been through, or nearly at the other side of an M&A process, a relatively simple one, seemingly. There will be more difficult ones out there. Do you think there's enough good M&A, you said we won't pick up any old thing, not all pounds are equal, we want the good stuff. Is there enough kind of good stuff out there in the US left for you to maybe contemplate more M&A?
Definitely, and what this transaction does for us, outside of getting us an asset that we really believe in and want to spend some money on, is make the company bigger. And that gives us a lot more flexibility to acquire some more advanced stage or more expensive things. Yeah. There's a lot of assets out there in land that is privately held or held by non-pubcos that you can have in your pipeline as attractive and so on and so forth. But you know, as we scale, but still being very strict about, you know, what we acquire, because we're not scaling for the sake of scale. But as we scale, each transaction becomes less dilutive.
Okay.
Or we can do bigger things. So I think there's still huge opportunity to consolidate assets in the US.
That's good to hear, because I think I was having a conversation earlier with someone else, and I was describing some of the projects which are out there, whether it's lipstick on a pig or a barn find. You know, they didn't quite run at the same speed they used to.
Yeah.
It was sort of not clear to me if the good stuff was still out there, and more importantly, is if, and this is a conversation from earlier today, some of the great and the good downstairs saying to me what's obvious to them, having been around the block for 30, 40, 50 years in some cases, there needs to be some sort of roll-up, there needs to be some sort of consolidation, but who's kind of got the funds or the stomach, quite frankly, to do that in the US? And what does it mean for companies like yours in terms of either participating in some of that, or what is the sort of knock-on effect for you if someone did do that?
Yeah, I mean, there's always a risk of, especially in a higher, as uranium prices go higher, it's going to be more and more competitive on the M&A front, and valuations will go up, and it makes all your decisions a little bit harder, and because you really need to be sure that you can spend money on something and make it more valuable than what you paid for, plus your spend. So it's probably going to get more and more competitive, as it always does, as uranium prices go up. But we have our pipeline, and we have a really strong board and governance that I don't believe would ever let us go out and do something that we didn't think we could accrete value to shareholders. So we've got a lot of we have a lot of depth to our board, as you know, and a lot of expertise in M&A transaction experience. So Premier as a company, I think, has a board that's second to none, especially in our size, and this provides me a lot of good advice and oversight on the transaction. So I don't think we'll ever be in a position where we're just buying things for the sake of scale. We're always going to be, and you know, we've already been down the path of not walking away from things that we thought weren't realistic valuations. So you never talk about those things, and you can't say specifically what they are, but it's already happened. You know, we acquired American Future Fuel last year, and we did all kinds of different things on the M&A front, and nuclear fuels was one that we were able to get over the line at a valuation that I think worked for both sides. So that was pretty exciting for me. It's kind of the first one as CEO. I walked into the other one, but the other one was extremely successful too, right? No resource, has a resource. 16 months later, PEA looking to deliver. So, I mean, it fits right into our mold of acquire, explore, develop. This is just taking an asset and showing we can make it worth a lot more money.
Good to see you.
Thank you. Good to see you too.
Yeah, enjoy the rest of your time here. Like I say, a lot of people, a lot of conversations to be had. Maybe we can have a chat about that another time.
Yeah, absolutely.
Okay, cheers.
Cheers. Thank you.